Hello and welcome back to The Note. Is there value in European banks yet? And if so, where is it to be found in the capital structure? It's in equity or somewhere in debt? Well, today we're going to be talking to someone whose job it is to look for those opportunities. He's Pimco's Managing Director in charge of investments in financial institutions, Philippe Bodereau. Philippe, thank you very much for joining me today. Let's start by taking a look at the measure which many of us have been taught to regard as the most important, because Basel has put a lot of weight on it, risk-weighted capital. And on this measure, it looks as though Western Europe is more or less out of the woods. How important is this measure now?
Well, it is still an important metric, and you've seen that European banks, which have often been accused of not doing enough to shore up their balance sheets, have actually done a fair amount. We've had 700 billion euros of capital raised by European banks, either from governments or from private sector, since the beginning of the crisis. The issue here with regards to Europe, and you can see that everybody is kind of getting there with regard to Basel III, yes, ranging around 9 to 10%. However, our view has been that regulators in retribution for the financial crisis would continue to push higher capital levels. And the shift in the regulatory debate is moving from risk-weighted capital to absolute leverage metrics. And by those metrics, European banks look a lot weaker, especially right. European investment banks. And that's where the pressures are here today. And that's why you've seen people like Barclays do a 6 billion rights issue recently, or people like Deutsche Bank announce a shrinkage of their balance sheet in the order of 20 to 25%, which is considerable.
Now, one of the ways that banks initially tried to deal with the problem was to introduce what were known as CoCos, debt that could convert into equity if some specified horrible event happens to their capital position. Doesn't seem to have had quite the level of interest that was at one point predicted. Is there value here? Is this part of a solution now that the debate is moving on from risk-weighted capital?
I think so, because there's a few reasons why you haven't seen a lot of issuance of CoCos. The key one has been that regulators, particularly in Europe, have been very slow in putting out very clearly what should be the characteristics of the new hybrid instruments, and that's only been clarified in May this year.
Right.
So that, if you wish, opens the door for more issuance. And the other one is that because CoCos actually count towards the leverage ratio, and because the leverage ratio is becoming a much greater area of emphasis, clearly to meet those new requirements via hybrid, non-dilutive hybrids has become very attractive. So I think you'll see a lot of issuance in the next couple of years.
And what kind of yields are available on there, given that even with taper talk going on, people still are very anxious about yields? What kind of returns?
So the range of yields in CoCos today is between 7 to 9%, depending on the bank.
Which in this day and age obviously means that they have a chance of selling it if...
Which is quite attractive when you compare it to dividend yields in many European banks, or with senior debt as well.
Okay, now let's take a look at another fundamental measure of banking health, which is the ratio of non-performing loans. And on this basis, we can see that the periphery of the Eurozone is in a different place from everywhere else. There's obviously a very serious problem with asset quality in the periphery, whereas with everywhere else we're talking about, I suppose, what we would call ongoing improvement, if not necessarily as fast as it's expected. Is that a fair summary?
I think it's a fair summary. So what you have is that in the north of Europe, you have banks that probably are too big and have an issue with leverage. In the south of Europe, you have a more traditional banking crisis and multiple years of recession that have resulted in a big buildup of non-performing loans. And that hasn't been quite addressed everywhere. You've seen that Spain has started to take quite aggressive steps last year to address its banking crisis, but other countries have large stocks of NPLs, like Italy, for instance. And it's going to be interesting what the ECB does next year. Before they take over single supervision and when they perform their asset quality review and stress test. And that could be a catalyst for some level of cleanup and recapitalization.
So with one final question then, that sounds as though you would still suggest avoiding the Eurozone. Does that point to the UK and Switzerland? Or where do you see the greatest value?
When we look at relative value across the capital structure in various countries, it feels to us that UK and Switzerland are the most attractive, primarily because they're quite well advanced in their restructuring and because the regulators are very hawkish on capital. In the Eurozone, there's still a lot more work to do, and you don't really get compensated today to be invested in, especially in Southern Europe, not super attractive right now.
Okay, Philippe, thank you very much indeed.
Thank you.
This is an area that people often dislike going into because it often gets very complicated indeed, but it does look as though there is some value to be found there and not necessarily in the places you would expect to find it.